Today, Tesla's earnings came in and I am super excited because they did absolutely phenomenal. So, Tesla sales up 80% despite supply chain woes. So, super amazing. We're just going through the news right now, just have a quick overview before we actually go over the earnings report. So, you can see that Tesla's revenue has accelerated from 10.39 billion to 18.76 billion in the 3 months to March, beating expectations of 17.8 billion. And its net income has also jumped from 438 million to 332 billion. Super amazing. During the daytime, the stock market had declined by 5%, but in the after hours, it has rose by 4.25% again. So let's take a look at the earnings. So from the summary, we can see that the operating cash flow is $2.2 billion in Q1, which is absolutely amazing. And they're basically out of debt. They literally have no debt. Their debt is like 0.1 billion. So super excited there. And you can see the main thing that I'm looking at here that's like absolutely blowing my mind right now is that they have a 32.9 automotive gross margin in Q1, which is absolutely amazing because there's a supply chain issues going on, there's the Ukraine-Russia, there's just so many things happening, inflation, and the gross margin is 32.9%, which is honestly amazing. Sorry, I skipped to the last line of the profitability, but you can see that there's 3.6 billion operating income with a 19.2% operating margin for Q1. Now, if you look at the quick summary, honestly, I do agree it was an amazing quarter for Tesla because of the revenues, deliveries, operating profit, and operating margin was over 19%. And also, like I said before, their debt has fallen below 0.1 billion. Amazing. Now, they're saying public interest in a sustainable future continues to rise, and we remain focused on growing as fast as it is reasonably possible. Yeah, I totally agree. I think more and more people are looking towards green energy and how we can harm the environment less. So, as you might have heard on the news, there is crazy expansion. They have a Berlin factory and also the Texas one. And they're also putting in efforts for in-house cell production, raw material, and also supplier diversification. I think which is really important and the right step forward. I mean, they already have amazing gross margins, but doing that all in-house would obviously impact the gross margin even more. Now, challenges around supply chain have remained persistent, and their team is navigating through them for over a year. COVID-19 outbreaks have been weighing their supply chain, and prices of raw materials have increased in recent months. Also, the inflationary impact of our cost structure has contributed to adjustments in our product pricing, despite a continued focus on reducing our manufacturing costs where possible. Yeah, super exciting. Okay, the summary, the good stuff. So, as you can see, for the revenues from Q1 to Q1 2022, year over year, 87% increase, which is crazy. Now, we can also see that their credits have increased by 31%. So, I just want to see what their gross margin is without the credits, but so far it looks really promising. As we can see, their gross profit year over year has increased 147%. So even when you compare it Q4 2021 to Q1 2022, you can see it's a drastic increase, which is amazing. Wow, Tesla. And their free cash flow, despite opening a new factory, like yes, it has increased year over year 660%, but even from Q4 to Q1, it's not that big of a decrease despite opening two big factories. So really nice. So financial summary, what are they trying to say? Yes, year over year, it has grown 81% to 18.8 billion. Now they're saying that the revenue has been impacted by growth in vehicle deliveries. Nice. I do think that more and more people are looking towards a more greener future and how they can contribute. And definitely having an electric car is the right way forward, and their average selling price has increased, and also growth in other parts of the business. Nice, yes. Now, for profitability, their operating income has improved to 3.6 billion in Q1, resulting in a 19.2 operating margin. Obviously, 19.2 is amazing. And they're saying that their operating income was impacted by growth in vehicle deliveries. Yep. Increased average selling price. Their cost of goods sold per vehicle has also decreased. Very, very interesting. And there is an increase in regulatory credit sales, like I mentioned earlier from that summary. So for cash, like they already mentioned, they're literally debt-free, but their short-term marketable securities has increased by 0.3 billion to 18 billion in Q1, which is mainly driven by free cash flow of 2.2 billion. Yeah, really, really nice. Okay, operational summary. So as you can see for Model S and Model 3 production, definitely year over year it has increased. Total production has increased by 69%. But even when you compare it to Q4, Q1 did pretty similar numbers, a little less. But I do have to say, with all the supply chain issues, this is looking really promising. Even with the Model S and Model 3 deliveries, as you can see, the total deliveries has increased by 68%. So you can see for their solar deployed and their storage deployed, the storage deployed year over year has increased. But when you compare it to Q4, it has definitely decreased. And even for the solar deployed, I think that makes sense due to inflation and everything else. I'm not sure if like solar deployed and storage deployed would be like high on my list, but still pretty good. And again, amazing supercharger stations, 38% year over year increase. But even when you compare it to Q4, Q1 doing better than it was before. Really, really great. I think that's the selling point of Tesla. Like if I had to choose between a random EV car and Tesla, I would choose Tesla just because of the supercharger stations and the connectors. Like I want to be able, or I want to have the choice to just drive to a really far place, but at least hope to see a charger there or see multiple chargers just to make my trip, less complicated. There's an increase in supercharger stations and also supercharger connectors. So let's talk about vehicle capacity. So in Q1, we saw continuation of the global supply chain, transportation, labor, and other manufacturing challenges, limiting our ability to run our factories at full capacity. Honestly speaking, despite not running it at full capacity and having 2 new gigafactories, still doing pretty good. It's amazing, Tesla. Okay, so for US, California, and Texas, as we can see that they started their Model Y deliveries from the new factory in Austin, and it's a huge milestone. Yes, sir, for their capacity growth efforts. Shanghai. So while weekly production rates were strong in Q1, there was a spike and they had to temporarily shut it down. Although limited production has recently started, they will monitor the situation. And the Berlin, so they have a new gigafactory at Berlin, which started March 2022. They are using the structural packs for the start of the production. Ultimately, the gigafactory will be able to produce Model Ys using both structural packs as well as non-structural packs. So nice, super exciting. So let's see. Okay, so for California, Model S, Model 3, Shanghai, Model 3, Model Y, Berlin, Model Y, Texas, Model Y. And then in Q, we have Cybertruck, Tesla Semi, Roadster. Nice. So I really like that they have new gigafactories, and I hope in the future we see more. Okay, market share of Tesla vehicles by region. So US, Canada, Europe is coming up, and so is Shanghai. So all in all, upward trend. So let's look at core technology, autopilot and full self-driving. I'm super excited. I love the whole full self-driving. Super excited for that. So they have a beta development with 7 software updates for 2022. So they are aiming to release the beta to all US customers before the end of this year. And the initial beta will be released to some Canadian customers starting March 2022. So for vehicle software, they have updated the mobile app and so that they can customize their UI and also improve charging time by accounting for battery temperature and allowed child lock. Super nice. And for the battery, diversification of battery chemistries is critical. I do agree, to better optimize our products for their various use cases and expand our supplier base. Okay, so half of Tesla's vehicle were equipped by the lithium iron phosphate battery, which contains no nickel or cobalt. Nickel, just supply chain issues. Cobalt, you're looking at increased prices and also child labor issues. So definitely a no-no. And they're saying that currently they're using these lithium iron phosphide batteries and for their standard range vehicles, as well as commercial energy storage applications. As a result of our energy efficient motors, a Model 3 with an FLP battery can still achieve a 267-mile EPA range. I mean, I don't think you need the standard battery pack everywhere for all the cars. We're talking about energy storage. So their energy storage deployments have increased 90% year over year, mainly by the Powerwall deployments. I thought it would be the mega pack, but you know, it's the Powerwall deployments. And they're also in the process of ramping up productions at a dedicated mega pack factory to address the growing demand. Okay. Solar, they are saying solar deployments have decreased by 48%. This reduction was caused by import delays beyond our control, and solar roof deployments have continued year over year. And for other services, they have a close break even, and year over year improvements were driven by strong used car sales, as well as growth in merchandise, Tesla-owned collision centers, and related services. Outlook. They are trying to grow their manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. Our own factories have been running below capacity, damn, and they still did so amazing. For several quarters, the supply chain has become the main limiting factor, which is likely to continue the rest of 2022. Cash. They have sufficient liquidity, I do agree, for their product roadmap, long-term capacity, and other expenses. Profit. While we continue to execute on innovations to reduce the costs of manufacturing operations over time, we expect our hardware-related profits to be accompanied by the acceleration of software-related profits. Yep, because they're gonna have their automated car and all these other features that they're introducing with their Tesla. Okay, and the product. So the pace of production map in Oslo and Berlin will be influenced by the successful introduction of many new product and manufacturing technologies. The factory ramps will take time. I mean, definitely it's a new gigafactory, but they're making progress. Okay, yeah, so this is the Berlin factory. Nice. The Texas one, this is massive, man. And body shop, wow. Okay, this picture I absolutely love. So the Model 3 body structure, you see all of these parts? There were 171 pieces. But look at now, they only have 2 pieces. This is the Austin-made Model Y body structure. So they were looking at 1,600 fewer welds. So as you can see, the number of vehicles have drastically year over year have increased, but when you compare it to Q4 of 2021, very similar. Same thing you see over here. Their operating cash has decreased due to obviously the new gigafactories, but their net income has increased. So all in all, really promising. And when you compare all of these graphs year over year, it has increased. Financial statements. This is what we need to look at. So Automotive regulatory credits. As you can see, as compared to Q4, it has increased. But you can see the total revenue has increased from Q4, and as compared to year over year, it's a large increase. We're looking at an increase of about 1 billion. Now let's look at the profit. Again, as you can see, the profit has increased as well. Definitely year over year, it has definitely increased. Now let's look at net income. Net income. We're definitely looking at an increase in net income from Q4 2021. So their price per share also has increased, as you can see here. But I like to look at the diluted version. That also has definitely increased. So next, current assets. Okay, so we're looking at cash assets at 17 billion. You are also looking at accounts receivable at around 6-7 billion. Really okay, and it has definitely increased from Q4. Even their cash has increased from Q4 and definitely from Q1 of 2021. Okay, now let's see total liabilities. Okay, we're looking at 30 billion. So total liabilities 30 billion. But if we just look at current portion of debt and finance leases, we are looking at 21 billion. So even if I just add up my cash and my accounts receivable, it's around 24 billion. It's still more than the debt and finance leases, which it's good to know. It's really, really amazing. Obviously, as compared to their total assets, their total liabilities are less. And let's see, the gross margin, excluding the regulatory credit sales, is 30%. So it's an amazing number to hear. Lots of people are talking about the automotive gross margin is at 32%. It has increased not only year over year, but also from Q4 2021. And yeah, this is really, really exciting in a time like this when there's so many supply chain issues, so many other things happening in the world. This is very, very nice to hear. Basically, this was a quick overview from the earnings. Honestly, this amazing has exceeded analyst expectations. Personally, for me, I love Tesla. It is an amazing growth company. And as you can see in the current market, when it decreased today by like 5%, but it has gone up again. It's a clear indication that Tesla is doing something really special. And I love their vision. I love the work that they do. And I'm super, super excited. I think this Q1's earnings just has like, I can't, it's amazing. And personally, I'm a big believer. I think this is one of the best growth companies to invest your money in for me. So guys, please do your research when you're investing. I'm super, super excited. It's Netflix had me like a little down. It was just super, super sad that, you know, they are like growing 10%, but they're losing so many subscribers. But this, I'm really, really excited to read, and I hope I have conveyed the same excitement to you because I'm super, super excited. And I hope you enjoyed this video. If you have any comments, concerns, please let me know below, and I shall see you in the next one. Bye.